Today's video is sponsored by 8cap, and did you know you can actually get a free copy of Edge Finder with the help of 8cap? The way this works, basically, if you create an account under our referral link, which I'll have linked in the description down below this video, you can actually get a free copy because they purchase it on your behalf. Now, how this works is basically if you follow the link that you'll see on the screen right now, basically scroll down to where you can see all of the different offers that we have, where if you deposit a certain amount of money into a new 8cap account, they will effectively buy our products on your behalf so that they're free to you, you get them free, and you also start trading with 8cap. Please also make sure to do your own due diligence on 8cap to make sure that is a brokerage that meets your own risk criteria. All the information, like I said, can be found in the description down below about this specific sign-up offer. Thanks to 8cap for sponsoring today's content. Now back to the video.
Good morning, everybody. Welcome back to another live stream. Hope you're doing well. I had a later start than usual today. We had a meeting with a sponsor this morning. We're doing a bunch of content work together, so I had to miss the first couple minutes of streams. Apologies there, but we are back. We are on the move here. Let me just make sure everything is running. We're good to go. Okay, so I was looking at gold this morning. Gold doing some interesting stuff. Overnight, we went from very red on gold to actually pretty green, now giving back a little bit of those gains. Hold on, let me fix my pen is not working right now. Let me get that sorted out. Let me just fix that. Launch that again, and we should be good. Sometimes you just have to restart it. Okay, yeah, we're good. So anyways, I'm still short gold. Nothing has changed with my position. I am looking at, or what I'm looking for today specifically would be some kind of rollover here. If this happens, if we continue to push lower and break through these lows, then I'm going to trail a stop. But again, we do see some signs of bullish response coming in from this current area here. I think that it could potentially just be a temporary floor. Like I think that we could continue to see gold roll over. But if it doesn't, the sign for me to cut the trade is still the same as it has been the last few days, which is a breakout through this $4,075 an ounce up into the 4100s would get me out of the trade. So I am still in the gold short, but just kind of watching and waiting. If we get something like this, if we start to break through the lows, then what I'm going to do is I'm going to take this stop loss and continue to pull it down and trail stops further into profit. So I'm just watching, reacting to what price wants to do today. The dollar actually pretty strong this morning. Daily chart still looking okay. We are, I've mentioned I'd be more interested in the dollar on a long trade if you were to see a pullback into the 100.5 level. So this is where I still think that the dollar has room to pull back. I'm not really interested in shorting it, but I do think that the easier trade for me is to continue looking for longs on a pullback if we get it. Yeah, so let's see what's going on. Somebody's mentioned the Japanese yen making moves here. Yeah, look at this. BOJ giving up. BOJ just gave up. It's been interesting. The 160 level has officially been broken, and I don't want to say I knew this was coming, but I have been talking about this for a while. This 160 level has been such a quote unquote obvious level of resistance for so long. And when something when something gets too obvious, a lot of times markets love to go play with that level. And so I think that that's what we've seen here. I think that the Bank of Japan tried heavily to hold 160, and now that has failed, right? What was that clear area where, you know, the Bank of Japan was going to hold the yen against the dollar has shown signs of failure here. I would actually argue that if this thing does drop down to this area, bulls, in my opinion, are more likely to hold that and continue the rally than to sell on through it. So when I'm looking at the dollar generally continues looking strong to me. Euro is, I was looking for a little bit more retracement here on the euro for a possible sell the rally on this one, but definitely going to keep an eye on the dollar crosses because I still want to be bearish things like pound dollar, bearish euro dollar, long dollar yen, but just waiting for opportunities to join the trade personally. So we'll see. S&P 500's flat today. Nothing really to say there. If we take a look at silver, I'm curious. So silver and gold both went from red to green to flat again. Dropping down to the 1 hour chart, again, you kind of see what I'm talking about. You had the overnight session. We were selling off, right? Asian session was red. London session was green. Now, New York session, we're kind of deciding, are we going to break and start actually reversing lower again? Or are we going to hold some of those gains that we've seen? So when I look at gold, someone says, what do you think about gold? Let's talk about it. So if I'm looking at gold, what I think is I generally remain bearish on it. Longer term trends are flipping from bullish to bearish, at least for now. And when I say longer term, I'm talking, of course, about like the daily chart, 4 hour chart that has turned definitely more bearish in recent months. If I'm taking a look at the asset scorecard specifically for gold today, what this is going to do is it's going to look at a combination of macro fundamentals. It's going to look at technicals, and it's going to look at sentiment to build a bias. And I've got something to show you here because someone pointed it out to me in the Discord chat. Sentiment is getting really interesting on gold. Let me show you. So let's come back to the asset scorecard here. Let me show you this really quick. Crowd sentiment, put call. Let's pull this up for ourselves. And we're going to go gold on put call. Okay, look at what we've got here. Something really interesting happening on gold. The last few days, we have seen a lot of put volume on gold. Now, what is put volume if you're not an options trader? Remember, calls are bullish bets, puts are bearish bets. When crowd sentiment gets really bearish on something, they tend to rush the put side, right? They buy a lot of puts. So we've actually had, interestingly, a lot of puts recently until yesterday, where crowd sentiment, or at least I know that's Friday. I'm sorry. Hold on. Let me double check that that's right. Yeah, that's Friday's data. We have not gotten Monday's data. So I'm curious where that will come in. It should come in shortly. But this is interesting because crowd sentiment went very, very opposite. They flipped to bullish sentiment on Friday's trading action. Lo and behold, look no further at what we're going to see here, right? Call volume gets hit on gold to an extreme level. Look what happens Sunday, Monday, Tuesday. Is that not so interesting how that works? Look at this. Ready? Watch this study. June 23 through June 25th, crowd sentiment's really bearish. The 23rd is 23rd. That is this range here. So hold on. This range here, crowd sentiment gets really bearish. Market rises. Right here, crowd sentiment gets really bullish. Market falls. This is why sentiment tools can be really powerful. So sentiment went from really pessimistic on gold at the lows to then getting euphoric, jumping into longs. Hey, we're going higher, and boom, disappointment again. It's really interesting how frequently that is the case. And so right now, I think that you are positioned for a lot of those people who got bullish very quickly are now kind of sitting in drawdowns. Their calls are underwater. Their bullish bets are looking painful. Very interesting how that works. Anyways, from a technical perspective, 4 hour chart still looks very bearish. I think that this is a prove it story. If you're a bull, the burden of proof, I think, is on the bulls right now. Like bears, lower highs, lower lows. Path of least resistance for me continues to be, I think gold moves lower. The burden of proof, I think, is on the bulls because, again, leave it be, it's just trending lower. At some point, if the bulls are able to, for example, break into the 41s, 4200s, etc., then I think that they have more ground to stand on. But right now, it's like every time you get a little bit of a pop on gold, that has been a better sell opportunity than a buy opportunity, right? So until that nature changes, keeping our charts really simple, sellers are being rewarded, buyers are being punished consistently, right? That is the theme of this market right now. Now that will change at some point. At some point it'll be the opposite. At some point sellers will be punished, buyers will be rewarded. But right now, as a trend follower, I look at this and I say, okay, each time gold rallies, I look at my macro fundamentals and I say, is this still a sell for me? And the answer has been for weeks on end, yes. Because again, go to our asset scorecard again. Edgefinder has been persistently bearish on gold. Macro has been super tilted in favor of dollar bullishness in recent weeks. And that by proxy gives us more of a gold bearish reading. So I'm going to continue to trend follow what we see here. I'm not reinventing the wheel here. I'm just keeping it simple. By the way, screen just changed here. These top prop firms, we've been building all sorts of tools on our website to help prop traders get bigger discounts. If you are interested in exploring our site for some super discounted prop firm offers, here's the thing. With a show like ours and the traffic that we get, prop firms offer our subscribers huge discounts because we have an audience that they are interested in offering services to. So if you are interested in brokers, prop firms, etc., of course, these are referral links. There's an affiliate relationship there. So please do your due diligence and understand that A1 Trading, our stream is supported by this. But if you are interested in checking it out, scan the QR code that is below my camera. So anyways, all that said and done, the macro continues to suggest bearishness in Edgefinder's outlook. So I am staying with the idea of looking for opportunities to sell a rally in gold, and that is it. So I'm still short. If we break higher, I'm out of the trade, and then I may reset and look for another opportunity to join it. But for now, my only task is to sell gold on rips and to trail my stop loss until failure. I like the setup. I'm staying with it. At some point, we'll flip. At some point, I'll be bullish on gold again. But right now, I'm just going with the flow of traffic, not trying to fight it. Because gold, again, yesterday, I had all sorts of people. When you are bearish on gold and silver, let me tell you, you are not a very popular person. A lot of people who love precious metals, by the way, that's me too. I'm just like I feel like I'm betraying my own. I like precious metals long term, don't get me wrong. But a lot of people have been like really upset with me for being bearish. They're like, you're gonna get killed on your shorts. And I'm like, I'm just trailing stops. I'm not going to lose any more. Like, I'm gonna make money on this trade. It's just, how long does gold want to keep going? And a lot of people are very, very adamant that gold cannot go any lower. They're like very convinced gold can't go lower. Understand, some of the greatest crashes in precious metals happen after the greatest run-ups. In fact, that's how a lot of markets work. The harder they rise, the harder they fall. Like that expression is very true in markets a lot of the times. A lot of the biggest corrections, crashes, sell-offs, resets, etc., in precious metals and in stocks have happened historically after the most impressive run-ups. And we had a very impressive run-up in gold between 2022 and 2025, 2026. We went up 250% almost. That's pretty incredible. So I do think that, yes, long-term, I still like precious metals, but you can also acknowledge when something has flipped macro fundamentally. We have a Fed that's also not super pro for a weaker dollar right now. Maybe at some point that changes, but in the here and now, trend following, I think, is the winning strategy for me personally. I'm going to stay with the gold shorts. So we'll see how that plays out. By the way, guys, Edgefinder is on super sale right now. This is the last thing I'm going to do, and then I'm going to throw it over to Mr. James Lane to take a look at the show, or to take over the show here, take a look at some markets. Edgefinder is currently on super sale right now for our summer sale discount event. Let me pull this up for you as well. Boom, there we go. Check out that layout. Wonderful job to the team here. Anyways, scan the QR code if you want to take advantage of the 40% off discount that is going on currently for Edgefinder. And we'll drop a link here in the live stream chat to where you can speak directly to a member of our support team if you need to set up a payment plan, if you want to bundle it with memberships, if you want to ask some questions about the tool, if you want to set up a trial, if you would be interested in doing a Zoom call with a member of our staff. All of those are resources made available to you if you are interested. Simply click that link that's just been dropped in the live stream chat or scan the QR code below my camera here for information on the summer sale discount going on right now for Edgefinder. It is our lowest price that we offer all year long, so don't miss the opportunity. Up next, guys, we have Forex James taking over the stream and talking trading setups now. Stay tuned. We'll be right back. This next segment of the live stream is proudly sponsored by the one and only Ola Prime. Ola Prime is easily one of the most impressive prop firms that I've come across with an incredibly professional team. They offer fast payouts within 1 hour, up to 95% profit splits. They have the largest number of trading platforms. I mean, just take a look at this list. They have MetaTrader 4, MetaTrader 5, TradeLocker, DXTrade, MatchTrader, and CTrader all available to their traders. And that's just for the Forex side. On the futures side, they have DX Futures currently with Tradeovate and NinjaTrader coming soon. Ola Prime has one of the widest selections for challenges and funded accounts that I've come across, with a wide range of account balances you can choose from, like 5 all the way to 200K. And just take a look at the variety of different challenges you can choose from to fit your trading style. They have a 1-step or 2-step pro accounts. They have the 1-step prime, 2-step prime, direct accounts, Ola Prime, 1 challenge. I mean, you have a wide selection here. And the reason this is so important is that you as a trader have a unique style. Everyone does. And finding the right challenge to meet your criteria is very important. If you go through their website, which I encourage you to do so using the link dropped in the live stream chat right now, you can explore in full transparency all of the different account types, all of the rules, etc. They also offer news trading and weekend holding, and they have direct and challenge accounts available. For a limited time, stream viewers get extra discounts using the promo code that you see on your screen right now, and also through the link and promo code being shared in the live stream chat. Take your trading to the next level with Ola Prime. Now back to the live stream.
Hello, hello. How's everyone doing? Happy Tuesday. Hope you're all having a fantastic start to your weeks. So, can anyone tell me how long it's been since gold had a quarter like this? By quarter, I mean the past 3 months, a financial quarter. I wonder if anyone knows that data. By the way, this isn't from me. This is from a stat that I saw by Walter Bloomberg on Twitter. So I'm not going to sit here and act like I found some crazy thing. Anyway, it's been 13 years since gold has had a drop like this over a quarterly period. So gold is on track for a 13% quarterly loss, its biggest decline in 13 years. That's crazy. That's, to me, I think that's crazy. You know, I was saying was it yesterday's stream or one of my videos? I can't remember. It all merges together when I make content. But yeah, what I was saying at some point, I don't know when it was. I think, you know, we've had a multi-year rally on gold. So basically, since let's say around here, 2022, gold has just been rallying to the upside. Obviously, we've had, you know, noise in between, some pullbacks and things, but for the most part, it's been a rally to the upside. I think in that period, we had many millions of retail traders join the markets, leave the markets, move to gold, so on and so on. And that's kind of all they knew. You know, they've come into trading and they've seen gold is just you know, buy every single dip. All you really need to do is buy gold. That simple. And obviously that whole regime has changed. You know, we know it's no longer a situation of buying pullbacks. It's more a case of selling pullbacks. I think Nick said it quite well. So I thought that was just an interesting point. It clearly shows how quickly the markets can change and how difficult it can be to change a bias. Anyway, Ray Beast, good to see you. Simo, good to see you. Sluggy, hello. Close to entering a short position on gold. Yeah, so I would love to, but unfortunately, I was way too stubborn and completely missed the move. Actually, that's basically what I was just saying. I fall into that trap as well. It was a case of a multi-year rally, and I just didn't want to sell it. I really didn't like the idea of doing that, and I've missed out. I didn't, you know, I wasn't buying it, but I also wasn't selling. So sat on cash in that one, a bit unfortunate. However, I do still have a pending order on Eurodollar. It's really playing with me. You know, it's twice now I thought I might get filled on this pullback, then this pullback, and now we're starting to pull back a little bit again here. Maybe I will, maybe I won't. what can you do? Not much. But I've got pending order at 1.15 and a stop loss at 1.62. So there's nothing more I can do. That's the only level I'm interested in being a seller, just because it lines up really nicely with previous structure on the left. It's a 61.8% pullback on the fib. It's just below the 200 moving average on the H4. It's, again, really the only area that I would want to get involved in Eurodollar at this point. The DAX position I've got did have a pretty nice run just after London session this morning, or during London session this morning. However, we are seeing a little bit of a pullback into the New York session, but yeah, nothing to shout home about. Euro Swiss is still moving sideways. Beautiful thing is, it's a nice swap market, so I'm getting paid just to sit through it, so I really don't mind that one. And the same thing here with Euro Yen. We took this trade, was it last night? Oh, no, it wasn't. We took this trade early this morning. So yeah, we went long on a break above the moving averages, basically just trying to catch the yen weakness and obviously the swaps as well. So pretty simple trade, just see if we can catch a bit of a drift to the upside in that one. But that's it. Yeah, pretty flat really. So not much going on my side. Is it just me or no one else can hear James? I hope you can hear me. I would assume someone would have said something other than you, Jeremy. Maybe it's your audio. A1 says they can hear me. Fantastic. So it's not a me problem. In the past, gold has corrected 67% peak to trough. Yes. Yeah. Gold is not a friendly beast. It can make or break your day. Let's put it that way. Not shorting gold under 4K. No, I would like to short gold now. It's not a case of I've got a price dependency on a bias. It's more a case of during the drop here, I made a little bit shorting, but not in swing position. I was scalping momentum, so it was a different approach. Oh, sorry, no, not this move here. I was lying. It was this move here. I was scalping to the downside. But basically, during all of this, since Iran started, really, I was kind of sat on the sidelines. So I made a little bit. Was it the end of January when gold really started dropping? Since then, I've really done nothing on gold. I think I took one long attempt, which was about break even. I went short, then I went long, and nothing really did anything. So yeah, it's unfortunate. Took that DAX long yesterday as well. Very nice flex. Well, I didn't see the rest of you. Nate in the chat was moving. What else do we have? Wash will hold interest rates or lower them next year, and lower them next year. That's a bold claim. We actually had a headline come out yesterday by Hassett. Let me see if I can find it. Here. Yeah, Hassett indicators point to another strong jobs report and arguments for a rate hike not so strong right now. So we'll see. I think what we spoke about yesterday, let me pull up the edge finder, is the US dollar is extremely strong. I've not seen, maybe even never, or a very long time ago, I've not seen a currency get a 100 score or 100% score. So the US dollar is undeniably extremely bullish right now, again, on a fundamental view. Now, obviously, we've got unemployment rate and NFP coming out on Thursday. So if we see NFP come out higher and unemployment come out lower, I think we're going to see a reemergence of dollar strength. Now, I'm not saying the dollar is weak, but what I am saying is the markets are very efficient, especially in large markets, very liquid markets like the dollar, the euro, the sterling, so on and so on. We've been seeing the markets price in these rate hikes since wash. So I think it's really a case of we've had, 2 weeks? Was it 2 weeks ago that we heard wash? 2 weeks of buying the dollar. Maybe I'm a bit off, but you know what I'm saying, about 2 weeks, give or take. And I think the markets have kind of priced in what they're expecting at the moment so far. So depending on what happens on Thursday regarding the labor data, it could be a case of actually we might just return back into this range if it's very poor. So if NFP is low and unemployment rate is quite high, that might deter a little bit of the rate hike narrative. Maybe we see a bit more repricing to the downside. However, if it comes out strong, so again, lower unemployment, higher NFP, it could be more a case of actually the dollar now has another reason to start rallying again, because that's just a reinforcement into what the markets were already thinking. Do you see what I'm saying? So I think that might be sort of the base case. I don't really have an opinion on what the data will be. I'm not really the guy to try and forecast that stuff, but I would expect it to be decent. I'm not expecting NFP to fall off a cliff or unemployment to rise massively. But again, I'm not an economist. Assemble Gamer, you're a beginner. Okay, welcome to the stream. You're getting thrown in the deep end a little bit here. What can I say to you? I don't know. It really depends how much of a beginner. If you're like very beginner, I would suggest going on the name below where it says TraderNick, clicking on that and watching some of the educational stuff, because these streams will make a bit more sense. What you'll find is I wouldn't say anyone that comes on here is overly complex, really, other than Chris Pulver. He goes right over my head with his options and stuff. But generally, it's all pretty simple, but it's all like mostly economic based or historical, sort of statistical stuff. So I wouldn't say it's necessarily really beginner friendly, but I wouldn't say it's really complex either. But I think you need a bit more of a working knowledge. But I think, the videos that people make, like Nick and myself, I think are pretty good at giving the education. Anyway, we'll move on. Wait, let me scroll up and see what's been said. ECB did that insurance hike right after the oil prices. Yes, look, I saw your comment on my video. Actually, I completely forgot to reply to it. But yeah, you are right. It did seem more like an insurance hike rather than a cycle. I don't think the markets are expecting a hiking cycle by the ECB at any time soon. The euro is getting weak. Yeah, euro is bullish against US dollar medium term. Pearls, you're taking a very contrarian view to us. When I say us, I'm assuming the chat is taking a similar approach to me. Oh, sorry, a similar approach as me. What is giving you the idea that euro dollar is bullish? However, actually, while I'm thinking about it, let me just quickly give you guys some information on that. So I did see, let me find it real quick. Credit Agricole has actually gone long euro dollar because it's 1.5 standard deviations undervalued, and that's according to their FastFX model, which is basically a fair value model that they use. It's proprietary. It's not based on Bollinger Bands and that sort of stuff. The way they use it, from what I understand, again, it's proprietary. I don't have a full understanding of it, but from what I do understand, it's based on a mixture of central banks, forward guidance, fundamentals, and technicals as well. They're also about to go short on dollar CAD. They said it's nearing their sell trigger at 1.42 due to overvaluation. Same thing with New Zealand US dollar. They're looking to go long. And then we've got Scotiabank or Scotiabank. I'm not really sure how you meant to say that. DXY correction is expected. US dollar CAD extreme overbought with limited upside. So there is a little bit of bank consensus that the dollar might be a bit stretched, but I think that's kind of obvious, to be honest. Like, given the strength and the speed that the dollar rose over the past week or so, I would say it's a little bit stretched. Not saying, again, I need to clarify, not saying it's going to crash or we're seeing any significant downside, but I think some sort of pullback is reasonable, maybe just to retest the previous highs over here. So we've obviously had the break, maybe a bit of a retest, just complete that sort of basic pattern and then some sort of continuation. That's really what I'd like to see. That would also trigger me into my euro dollar short as well. Bashi, good to see you. Hope you're well. Chris is goated. The thing is, I think Chris is leaps and bounds ahead of me in terms of like market understanding and skill. So the problem is, I think he's more stock and options orientated. I tried to learn options. Not for me. But yeah, no, Chris is great. Why is Ola Prime 2K account not working? I have no idea. I'm sure they have a support chat for that. But yeah, if you're looking for Ola Prime, 35% off, use code A1 Live, QR code on the screen. Shout out to Ola Prime. It's been trading for 25 years. It's almost as long as I've been alive. Crazy stuff. I feel like it broke out of major resistance. Eurodollar has been falling since 2008. If you draw a trend line, that sounds more like a bearish case to me, because I'm looking at the same thing. So if we go weekly time frame, that's exactly what I've been looking at for the past 2 years, maybe, is this sort of lower high pattern that we're getting. It's just a persistent downtrend higher time frame wise. And every time this happens, we do have a pretty significant move to the downside, which is one of the reasons I was looking towards parity, not specifically a target there, but keeping in mind that's a potential outcome. So yeah, I get what you're saying, but again, that sounds like a bearish case. I'm fairly sure you said you were bullish. Chris Man Official 1, hello. Check out silver. Okay, you don't need to spam it 4 times. I'll check it out. Don't worry. I'm also great. Oh, Nelson, that's nice of you. I appreciate that. I think everyone here is great. I think Nick and the team, I should say, has done a fantastic job building a roster of traders that have different approaches, but all have what's the right word? All have valid reasons for what they're saying. It's not a case of, you could get any trader off the street and they could give you an idea, but it's about how is that idea built? What's the reason for it? I think that's a very difficult thing to build, really. And I think they've done a great job. Anyway, silver. I think it's actually a very simple trade, theoretically, or hypothetically, of course. So dollar pairs, gold and silver included, are still bearish. So you can see New Zealand US dollar, Australian US dollar, silver, gold, pound US dollar, euro US dollar are all actually all very bearish. So I think in terms of finding direction, that's already done for us. We want to be short. Trend wise, we're also looking at shorts as well. We've also had, whether you trade moving averages or not, we've had the death cross, which is 250 moving averages crossed on a daily time frame. It's normally quite a significant thing. A lot of traders globally, trading floors and retail alike, look at that type of thing. But it's more of just quite a telltale sign of what the markets want to do or are doing sentiment wise. So I think, direction wise, it's pretty simple. So we've had a break of previous support. I think I'd be really happy to just look for a retest of this level, obviously where the previous lows are, and then a continuation lower that would also bring price back into this fib zone between the 61.8 and the 50% retracement. And it would allow the moving average allow the 200 moving average here to just catch up a little bit, have a little bit of a sort of mean reversion, if you will, and then that continuation lower. I would be very happy with that. If I can get an entry there, I'll take it 10 out of 10. I swear there was another chart request, but I might have missed it. Excuse me. Don't check silver. Too late. Oh, gold? Trade gold, man? What do you mean trade gold? I can't trade gold. There's no entry for me. But on the topic of gold, I think it's basically the same sort of approach, fib from the high to the low. Wait for a pullback within the fib zone, and then look for a rejection for a continuation lower. It's a strange time because normally I can sit here and talk about various different things, all these different ideas. But to be honest, I don't have any. Right now, all I've got is go long dollar. Not financial advice, of course. But all I've got going on is looking at every dollar pair, waiting to go short. Or long, obviously, depending. But yeah. Yen intervention again on lower time frame. Has my euro yen been stopped? It's still in profit. It's all right. It's all right. We can go for the rest of the week with a smile. Is this what we've gotten to in the markets? We're now looking at what 5-minute time frames, 2-minute time frames at these spikes. Yen intervention. It's all good. If you draw a downtrend from the top of the 2008 crash, you see that we have a very important breakout. No, I said mid to. Okay, fair enough. If that's the way you trade, I get what you're saying. I don't necessarily disagree, but I'm more like to identify longer term trends and sort of just wait for short term pullbacks and try and get into them. But yeah, I get your point. DAX outlook. I'll be honest, I don't really have much on DAX. I am long DAX, but it's not my trade. It's from one of my traders in Elite Traders. So yeah, I don't think we've got a reading here. No, we don't. Let's have a look at the asset scorecard and see what's going on. It's actually completely flat. So we've got a score of 0. So on a fundamental side, jobs market has got nothing. Inflation has got nothing. Economic growth is quite bullish, but then technicals are bearish as well. So it's kind of flattening out. These two are basically nullifying each other. So yeah, overall, there's not much going on there. I do like the technicals, and that's mainly because by default, I like to go long on these assets. So, DAX, S&P, Nasdaq, so on and so on. It's kind of just the easiest way to go. By default, go long unless there's a catalyst like, COVID or some sort of black swan event to really trigger a short position. But generally speaking, being a buyer is a pretty safe way to go. I mean, look at the trend here. Absolutely fantastic. So that's really what we're kind of banking on there. I think obviously there are some fundamentals behind it, but they're not mine, so I don't have them off the top of my head. But yeah, either way, I'm quite happy to stay long, and I've already got 2 positions on. They're each half risk, so I've kind of staggered it a little bit. But yeah, that's that. James, my euro pound is in ongoing drawdown. I also have US dollar yen shorts for intervention play. Oh, Naruto, tricky. You're in a tricky spot. Dollar yen shorts. I don't know about that one. The thing is, it's easy for me to sit here and say I'm not sure about that, but I was short at 160, so I'll be completely upfront about that. So yeah, I didn't do too well on my dollar yen shorts. I don't mind the idea on paper. The problem is, it's how do you actually do it realistically? Because as far as I'm concerned, it's a very 50-50 thing. So when I was going short down here, it was still a will they, won't they 50-50. But at least I also was looking at, the previous 160 level and the reaction there. So it's a little bit more backing, only small, but still something. The problem is now we don't really have anything. So, dollar yen could continue to 164 and then we get the intervention, or it could happen tomorrow, or it could happen right now. You know what I'm saying? So it's something I can't really give you much on. But then if we layer on the fact that the dollar is very strong, it doesn't seem like a great position. I'll be perfectly honest, with the utmost respect to you. As for euro pound, I like it because I don't like the UK. However, the reason I'm not in a position is because I don't have a catalyst. So when I have a bias like this, so I am bearish on the UK long term. That doesn't mean I am always short in the pound or I'm in a super long-term position. It just means that's where my sort of bias is shifting. You know what I mean? So for me to actually take positions with that idea, I have to wait for what we call a catalyst, which in my case, the way I look at it, is something to trigger some sort of repricing to back up my thesis in the shorter term. So it might be, let's say, lower inflation in the UK. Maybe we could then see a more dovish Bank of England, for example. So that's the problem right now with euro pound. I don't have a reason to take the trade. So if we look at this, it's actually slightly bearish, -2. Technicals are bearish. We've got the labor market bearish and economic growth is bullish. So we're very sort of mixed. Technically speaking, we've spoken about this over the past week or so. This support level is really nice. I don't think anyone could deny we've got a really strong level there. But the other problem, if we're going off technicals, is this sort of lower high pattern that we're seeing. And this, I think the technical people call this is it descending wedge? I'm not sure what they expect from it. I don't know if it's a break lower or break higher. I've got no idea on the technical pattern side of things. But typically, I'm fairly sure it's some sort of breakout trade idea that people look at in this sort of situation. But yeah, I don't like it, to be honest. It's not that I don't like it. I don't have a reason to be in yet. I like it long term, maybe. What points am I waiting to enter gold? Just on the next pullback, really. So if we go to the H4, it's the same thing with all of them, pound, dollar, gold, silver, Australian, US dollar. I just want to see a pullback. So these aren't really meaningful enough or far enough for me. I like to see pullbacks to fib levels. So, between the 61.8 to the 50% retracements. So something like this, that would trigger me into a short position. Anything other than this, I can't really get in. Just again, these pullbacks just aren't enough. I like to enter on measured pullbacks, and that's just the rule set I follow. It's just how I trade. But yeah, that's really all I'm waiting for. I think gold is fundamentally bearish. I'm still bullish on the dollar. So yeah, I've got no reason to flip bias there. I don't think BOG will intervene in a dollar bullish environment. It will be under a sideways. Yeah, you are kind of correct. First of all, it's not the Bank of Japan, it's the Ministry of Finance. But yeah, so historically, we've seen interventions happen in low liquidity environments. So it'd be like US holidays, basically when there's less volume in the markets to obviously eat up the intervention. So it has a little bit more impact. I don't think they would do it in the next few days, maybe. I don't know. Maybe. I don't know. Again, it's very difficult to tell, but I would be a little bit surprised if it happens within the next. Actually, hold on. No, I'm lying. Never mind. Ignore all that. I'm yapping. They're trying to influence it by their words. Yeah, I don't think that works really. The ECB did a good job though. If we look at euro dollar, the ECB spoke about 1.2, and that was very quickly respected. So if we look, I'm not saying this is purely because of the ECB. Obviously, we've had situations outside of that as well, but the ECB came out and said 1.2 is, I can't remember exactly what they said, something about like uncomfortable or something along those lines. Again, I can't remember exactly what it was now, but I know the ECB spoke about 1.2. We briefly broke above and then very quickly obviously rejected that level. So interesting stuff. But yeah, I don't think BOJ or MOF have that type of power really. Anyway, actually, let me just quickly see. I've got to head off in a second. I'm coming to the end of my stream time. Oh, it's Alan. Alan is coming on shortly in the next 10 seconds. So ladies and gentlemen, have a fantastic rest of your days. I'll see you all tomorrow. Stay safe. Don't get margin called and don't go anywhere. We've got Alan Perez coming to take over the show. You're in great hands with him. See you later.
If you're enjoying the stream right now and would like to join us beyond just live streams, consider joining our free-to-join Telegram channel. Inside of our Telegram channel, we're sharing daily market analysis, bonus clips from the live streams and videos, giveaways to our products, prop firms, and brokerages, and much, much more. So like I said, if you're looking to stay up to date with ideas that we're looking at in markets, even if you can't make it to a live stream, consider joining our Telegram channel down below in the description of this live stream or being dropped in the live stream chat as we speak. Just click that link, it'll navigate you over to Telegram, click join, and you can come back to the stream. It's totally free to join, and if it's easier for you, you can also just use the QR code that you see on the screen right now. Now back to the live stream.
Good morning, good evening, good afternoon, everyone, wherever you guys are watching this. Hope you guys are doing fantastic. Let's go ahead and carry on that conversation on Japanese yen. Yeah, I think we should. It's a hot topic here. James was doing a great job here at explaining and giving his thoughts on that. And I would love to continue carrying it on. So if you have any questions on that, feel free to drop that into the chat, and I will do my very best to go ahead and address it. But here's my personal take on Japanese yen, right? Japanese yen intervention, cashing, all that. In my personal opinion, it is a very tricky thing to do because, for one, you don't know when MOU is going to go ahead and intervene, right? Also, they have intervened already and it didn't work. So that's another thing that you have to kind of worry about is like, if they were to intervene, will it work this time or not, right? They already wasted 11 point something trillion dollars or 11 trillion yen on trying to tame it. Yet the current fundamental drivers, which is higher inflation, restrictive central banks, all that good stuff, is still pulling dollar yen higher. So that makes it very tricky. So my thoughts is, and I would say advice would be, don't obsess over dollar yen. Like, try to find the next best trade. In fact, I think that dollar yen could be a very well played out trade once it starts to happen. But until then, I would just try to focus on something else, right? You do have you have the dollar long story that you can still participate in. You have the metals to the short side you can still participate in. You participate in the AI trade, the Nasdaq and still, Nasdaq, S&P, Dow Jones, Russell, they're all getting strong readings on the Edge Finder. If you get a pullback in those, you can participate. So I think there's better things out there. Now, if there was no trade to be made and everything is just kind of in a funk, and the only thing that's potentially lucrative is dollar yen, then at that point I would kind of focus on dollar yen. But I think that there's better things out there. And so it's really tricky to try to, take a bunch of stabs at dollar yen and then it just fails and fails. Because if you look at the chart, if you had jumped in there when you had intervention, you would have been in a very tricky spot. Like, I had this line here, this white line. This is the previous high where, we intervened at. We are now above that line, right? So that's another tricky thing. We have intervened here and then here again, and you have just completely wiped out. Now, some say that, it's possible that you got to get some kind of liquidity and the stops got to get hunted or whatever. And so dollar yen will pop above 162, grab all that liquidity, and then it'll shoot down. If that's your thing, sure. But again, it's a really hard thing because not only do you have the rate differential, which is always pulling dollar yen higher, that is like the magnet to the upside. You still have other things that are outweighing some of that as well. So you do have, the dollar acting as a safe haven. Some can say that's over with or not, but in my opinion, the war is still not officially settled, right? So you do have that aspect, and then you have obviously the restrictive tonality of the recent Fed meeting from war. So I think that the dollar yen again is a tricky trade. Maybe we can look at something else. So that's kind of my thoughts and opinions. Good morning, Kier. Good morning, Elvis, Simo, Bashi. Good to see you, man. Sluggy, all you guys, fantastic. Ray Beast. Good to see you guys. Let me see what's going on there with the chat. This will turn like what Soros did with Bank of England. They tried to intervene and increase rates, but it didn't work. Just in the context of it, yeah, I mean, maybe, right? Maybe someone breaks the Bank of Japan, but yeah, that's kind of my thought process. So to answer my own question, or to kind of continue on with what I'm rambling about, what is the next best trade if dollar yen is not the case? There's a couple things that I'm looking at. Let's start with dollar, because dollar is pretty much driving most things here. If you were to get a pullback into the dollar index, maybe 38.2, 50%, and you have buyers step in and continue it higher, then that is just the easiest, cleanest trade, I would say. Not the easiest, because nothing's very easy, but the obvious trade is just to continue dollar to the upside, as long as you still have, good U.S. fundamentals. I think we had Jolts came in good this morning, just now, right before I came on, if I'm not mistaken. So the fundamentals out of the U.S. are still looking quite good. Where is Jolts number? Did it not come out? Am I wrong? I thought I saw a Jolts number. I thought I saw it though. What the heck? I thought I saw Financial Juice show me the print on I got a notification on my phone. Maybe I'm wrong. But yeah, you have some US fundamentals that are still looking good, right? So that's pointing in the direction where, if you have a good labor market, you have elevated inflation, you have strong growth, you have a scenario where the Fed can be restrictive if they need to be, which is helping boost the dollar up. So if you do get that pullback to 38.2, the 50, or the 61.8, and you do get, buyers in there stepping in and holding that level, then I think that the trade is the cleaner one would be dollar to the upside. And you can do that via short the euro, short the pound, short the Aussie, short the Kiwi, or long dollar yen. Well, not dollar yen. You can go long dollar CAD, dollar Swiss, all that good stuff, right? So that would be a very clean trade in my personal opinion. Another trade that I like actually is the stock market. So the S&P, I had a limit order here on my FTMO prop firm account to 7,200 right here. If you were to get a pullback into this level and continue higher, you can see I have these scenarios lined up here. So scenario one is that S&P just continues its strength and just shoots higher from here. The second scenario would be you get a pullback into this level of support, that 7,200 level, and then you get some more momentum to the upside. And then the other scenario, the one I like the most, if I get it, I would be very happy, is if you get a pullback to 7,000, right where that level of support is, right along with their 200-day moving average, then you can, aim it to the upside. But you can see here that this recent pullback here at 7,200 did held up quite nicely, and then you continue your momentum higher. So that's kind of what I was looking for. Yesterday you had a strong stock market, so I didn't get the pullback, so I just eliminated that order. But again, I'm still looking and open to go ahead and take this to the upside if you get some meaningful pullbacks in stocks. The edge finder is pointing in that direction as well. So you have Dow Jones getting a very bullish reading, the Russell, the Nasdaq, the S&P getting bullish reading. So I love to see that. And by the way, everyone, if you're new to the stream here, this tool is a tool I use. James uses it. Everyone here on the live stream uses this tool to go ahead and include fundamental analysis and sentiment analysis into your trading. Very, very simple. I would argue it is as simple as technical analysis, because all you have to do really is just go to this page here. This considers all the fundamentals. So when you think about GDP, PMIs, retail sales, CPI, all of the data figures that influences an asset's direction or fundamental score, the algorithm does it all for you, and it just gives you a clean score of bullish, bearish, or neutral. So basically what I'm trying to get at here is you can see here that the Dow Jones, all of these asset classes here are still getting a bullish reading. So it's just a matter of finding a good technical setup to go ahead and participate. So for me, a good technical setup would be S&P at 7,200, The Nasdaq somewhere around. Let me go ahead and draw this out real quick. Nope, didn't mean to do that. Let's see the Nasdaq. Where would I buy the Nasdaq? What's going on here? Cool. Okay, Nasdaq somewhere around over here would be nice. And then similar to S&P 500, those recent highs where we had that breakout here. So Nasdaq would be 28.4, 28.5 to 26,000. 26,000 would be the ultimate value in my opinion. Dow Jones, where would I scoop up some Dow? Something like this would be nice. Where else? All the way down here. That could be a stretch though. I think 50,000 would be good for Dow Jones. The Russell's a little bit trickier too. It's have good relative strength. I will say that. Russell, I wouldn't really do it. I like the S&P the most. I think just to get some of that broader rotation that we've been seeing out of AI into the S&P. Now, I will say yesterday was a really big day for AI. So you had all of the big names. It seems like we had some kind of a micro rotation back into AI and stuff yesterday. But I think S&P and Nasdaq are the top two for my opinion. So dollar long, S&P, Nasdaq up. There's one trade that I did take actually, which is a little bit contrarian, and I'll go ahead and talk on this when Marco comes on. But a potential stab at a contrarian of dollar long. So I do think that you can have the idea where dollar index pulls back to 38.250 or the 61.8, right? So I do think that there's a chance where you have that pullback. And I'm actually playing that trade. I took a small stab at it. But again, I'll get to it here when Marco comes on, because we were doing some homework yesterday, Marco and I on the stream, trying to figure out what would be the next trade if you do get some dollar softness. So I'll go ahead and wait for him there. Another thing I definitely am looking at right now is yields as well. So yields are getting softer here. You have the 10-year yield basically flush below this upward trend line, you can say. The 2-year yield as well is still within the upward trend line there as well. So I think personally, if you were to see a breakdown lower of the 2-year yield all the way, below this trend line here, you start to get a clean flush lower similar to the 10-year, then I do think that the market is starting to walk back some of those rate hike expectations, in my personal opinion. And in that case, then I would start to become dollar bearish, just my personal opinion. So we do have some strong data here this week. We have ISM manufacturing, which is, I believe, tomorrow. And then you have NFP, which is on Thursday, because you do have the observation on Friday. So NFP on Thursday. So for those that don't know, that's going to be a big one as well. So don't get blindsided by that. Definitely keep your eyes peeled for it. And so, if you, in the event that you do get some weak dollar data, right, because the NFP report is supposed to come in lower than previously expected or than previous number, then yeah, maybe this could start to unwind some dollar strength there. So we'll go ahead and see. That looks great for equities. Yeah, sluggy. It's doing pretty good. Good relative strength as well. It's been really resilient. Another one that I like, I was looking at this the other day. Copper's looking quite well as well. I think it's still getting a bullish reading on Edgefinder as well, if I'm not mistaken. Yeah, getting a bullish reading of +5, so it's pretty good. But yeah, guys, one thing I would say too before Marco comes on and joins me here, go ahead and join the Telegram and Discord. It is completely free for you to join. We have lots of things for you there. Free daily analysis. We have chalk, markups, discount codes, all that good stuff. We're having a summer sale right now of 40% off. And if you're watching the stream and you reach out to the team today, you can actually get 45% off. So definitely take advantage. If you don't have the Edge Finder and you're looking to do so, go ahead and start this summer if you have some free time or whatever. I definitely recommend it. Also, to check out this video if you haven't seen it already. I think you might like it. So I'll go ahead and leave that there. But yeah, join the Telegram channel, completely free value for you guys. We do our very best. And also to the website, A1Trading.com. Julie has done a great job at compiling new stuff, and Nick and the team have been giving out some new resources there as far as calculators go and all that good stuff, all completely for free for you guys. So definitely check it out. You guys will love it. Love it, love it, love it. One other thing, let's look at oil too. Oil not doing much. Not doing much, I will say. I'm interested in buying oil somewhere around here at 64. Edgefinder still has a bullish reading, if I'm not mistaken. Yeah, bullish reading of 5. So that makes sense. Technically speaking, I do want to get in before the war gap happened. I think oil to the upside, even just targeting that 200-day moving average or above would be wise, in my opinion. I think that would be a good one. I don't know if we'll see oil back down all the way to like the 52s and stuff like that. We have a lot of catch up to do as far as supply concerns go. Bitcoin here. Oh, look at that, guys. Bitcoin's breaking down lower. Maybe we do get Bitcoin to 50K sometime soon. We are making some progress here on the downside. It seems like this level here, this level of support is not holding up quite nicely. And potentially we get a breakdown. So we'll go ahead and see. Let me see the Edgefinder score, because I did want to go ahead and short Bitcoin, if I'm being honest with you guys. But the Edgefinder score was getting a neutral reading. It's actually getting a bullish reading of +7. So that's very against what I'm trying to do here. So yeah, not looking to short it, but I am looking to spectate and see how this thing goes and how low it goes. The next target I have is 50K there for Bitcoin. If we flush below that, then I'm curious to see what happens next. Let me ask you guys too. Do you think Bitcoin to 50K is going to be some kind of the bottom? It is a long-term level of support. Or do you think that Bitcoin is doomed and you can see it to 30, 20K? I'm curious to know, are you guys like pro Bitcoin, or are you guys thinking that this thing is a fugazi, and that it's going way lower? I'm curious to know. Marco, how you doing, man?
Hello, I'm doing well. How are you?
Pretty good, man. Pretty good.
Cool. So, any new positions?
Yes, I was waiting for you to come on. I chatted with you yesterday privately about it. Dollar Swiss. So let me go over the DXY first. I think that DXY, for one, we did hit this level of 100.2 or 102. I'm sorry, and that you have the potential for it to get softer a little bit if you get some kind of missed expectations, missed data releases. Dollar to the upside, I think, is a mature trade, and it's potentially overcrowded, I would say. So I do think that if you were to get some kind of missed expectations, you can see some softness. So what I'm going to do for now, Marco, and what I did was I shorted the dollar until you get the 38.2, the 50, or the 61.8. Because at that point, if the trend is still to the upside, the buyers step in, and then, from there on, right? So what I did was yesterday we were kind of looking at which currency pairs could we short the dollar with, right? So we were looking at the Australian dollar, the euro dollar, the pound dollar, Kiwi dollar, the yen, the Swiss franc, and we were kind of stuck on the Swiss franc and the yen. If you go to equal strength index here, you can see here that these are the two next best things, right? And if you go to equal surprise index, you can see that the yen has, beat 100% of their data, and the Swiss franc 71%. I think that the Swiss franc would really do well. The COT data history on the Swiss franc is very consistent, but I don't think that's a bad thing either, because all this time here, right, in these environments, the reading was low, but the Swiss franc has really strengthened against the dollar. So I think it's one of those things where if you were to get overall dollar softness, one of the best players would be the Swiss franc, in my personal opinion, versus something like the Australian dollar, where people are clearly offloading their positions, similar to Canadian dollar, where it's very clear that they are offloading their positions. I would say the Swiss franc, similar to gold, is where you have some kind of consistent demand for it, and it's a safe haven, right? So you always have that on your books. Another thing that I saw, Marco, where is it at? It's going to be seasonality. Seasonality for the Swiss franc, for dollar Swiss, I really liked it. We are right here, right now. And the seasonality for the past 10 years does show some kind of a decline, a significant one, really, for the forward coming months with dollar Swiss, for dollar Swiss. So from a technical perspective, it looked good as well, right? Similar to dollar index, where you tapped into 100, you're rejecting it. Dollar Swiss franc here tapping into this level of resistance. You can see you rejected it once, twice, 3 times, 4 times, 5 times, 6 times, 7 times. Now we are here for the 8th time. So we'll go ahead and see if this level holds for the long term. My first target would be somewhere right here about this level of resistance that could turn to support here. So I'm going to turn this green, where I think this would be the same kind of level if dollar index gets to like 100.5. So that's kind of what I'm doing right now. Now, if you were to get a blowout of expectations this Thursday and tomorrow with US data and dollar continues higher, then fine. But I do think that it could be worthwhile if you get in here prematurely, ride the pullback to the downside where the next level where buyers can step in. And then in the event that you do have missed US data expectations, then you can actually catch a little bit more of it and you're in it a little bit early.
Well, I'm positioned the same. Pretty much I'm short on the dollar. We'll see if I'm too early. I think it's the right path for the next few months, but the question is, am I too early or not? So we are getting the Warsh speech tomorrow, and we're getting the NFP print on Thursday. So the NFP print, depending on the stop loss, could be a problem. Could produce a shakeout on, let's say, my USDN shorts, which, to be honest, at the moment I'm willing to go through. But I think if I get stopped out on this idea, I will try and probably re-enter. So I think UJ is definitely approaching my stop loss. If I bring it up here,
It had a pop, I think, last night. Well,
yeah.
Or now too, but
So let's take a look at UJ. So UJ pretty close to this. I mean, halfway there, but there's not a lot of momentum needed for it to hit the stop loss. So I think in this case, we either get an intervention or the MOF, the BOJ, they just let it slide to, I don't know, above 163, 164, 165. And I don't plan on holding this for more than, let's say, a week and a half. So maybe by the end of the next week, because the swaps are pretty expensive, and if they don't intervene soon, I just kind of would take it as a scratch and move on. I still very much like my GU buy position, so that one has been running some pretty decent profit and pulling back today. But I still believe that this is the right thing to do. So I would say GU and dollar Swiss do seem to be like pretty good candidates, especially with the levels of support, levels of resistance. So with GU, you're getting this level of support right here at 1.315, and on USD Swiss, as you mentioned, you're getting a resistance at 0.809. So it's kind of a double whammy with the fundamentals being in line with the technicals. And for you, is it still mostly kind of a small bet, so a small hedge, or is it something that you're looking to get in with more size if the team develops? So
yeah, for now it's small, but one thing is, like, if you were to see continuously, like, the dollar story just starts to weaken as far as like data points go, then I think that you still have a lot of room to the downside for dollar Swiss. And so it gives me a lot of time and a lot of I guess chances to go ahead and increase my position size over time. So like, let's say you wipe out this level here, right? And you get down here and you clearly wipe it down, then I would probably add one more and then target this level and then et cetera, et cetera. Now, once you're like all the way down here, I probably won't be adding anymore because it just brings my average cost down lower. I would probably stop adding probably around this level, honestly, here. But when it comes to like the dollar Swiss story, it reacts very cleanly to technicals. I mean, you can see obviously here, like, you just kind of bounce back and forth right here, right? So and similar to this area right here, and if you go back even further, all of this, right? It's very, very clean. So yeah, so for now it's a small filler position, because one thing that I need to be mindful of is overhead targets here. So if dollar Swiss continues to chug higher, which is a possibility, you can see here that this was solid level. And go to the weekly time frame to make it easy on the eyes. You can see that this level here was a solid level of support. So here, and then more recently here, right? So if you do get a breakout above this level, then I do think that dollar Swiss has the potential to go all the way up here. So that's something that you have to be mindful of as well. So I'm kind of just betting that in the event that you do get some missed US data, along with the market walking back some of those rate hikes, then I do think that you have a potential to be a little bit early and take advantage of a deeper pullback in the dollar.
Yep. And so, what else do you like that's not connected with the dollar team? Is there anything, or still developing, or let's say still waiting to see a development on, I don't know, gold, Bitcoin, stocks? So, any takes on that?
I think everything is somewhat connected right now, man. I would say
Absolutely.
that's the hard part. One thing I could see is like the stock market starting to do its own thing. So like right now, the dollar and the stock market is kind of moving up in line together, which usually there's an inverse correlation there. I could see that if you get some dollar softness there, especially if it's due to the market walking back some of those rate hikes, that the stock market just continues to chug higher. So that could be a theme as well that I'm looking to do. In fact, I was telling the stream here this morning that I had a limit on my prop account at 7,200 for a swing trade to the upside, but we never got it there, right? We just kind of just moved higher. So one of the scenarios is just you just move higher straight from here. You get the pullback to 7,200 or the pullback to 7,000. I was kind of hoping for that pullback to 7,200, but we never got it. But I'm still open to it. So if you get something, some kind of a catalyst, maybe NFP shoots it lower, I don't know, and you get some kind of a discount, relative discount, I would be open to buying it. So I think maybe that could be one trade that could possibly start to disconnect. But right now, it seems like everything is somewhat connected. Like the metals too is due to a strong dollar and stronger inflation and all this other stuff. Silver as well. Oil's tricky too. I'm kind of open to buying oil, but again, I would need a deeper pullback. I want to get in below the pre-war gap, but it's getting a bullish reading on the edge finder as well, so that looks good for me. But yeah, that's pretty much about it. How about you? Besides pound dollar, anything else?
So for me, like the NFP print is a bit tricky because if it prints hot, it means the Fed can be more hawkish, or the market interprets that as being more hawkish for the Fed. But if it prints lower, it's bearish for stocks. But then again, the Fed will flip dovish, and it means lower rates. So from my experience, the stock market tends to react more off of rate of interest rates rather than the actual NFP print. So even if the NFP print comes out strong, I think it's actually a more bearish catalyst because you may get higher rates in the future. If it comes out a bit weaker, like 20, 30K, it's still positive, and the Fed can then actually cut. So I think a lower print would be more bullish as far as the stock market goes. But as far as the S&P, so if I bring it up here on the charts, let's go to the S&P. I think it looks okay. It's definitely stagnating here and kind of starting to struggle, but it's still above the 20 MA, which is a pretty bullish sign. So just a second, I think I'm getting a call. Okay. I'm bullish. Basically, I'm still in some of the stocks. So I'm in Caterpillar, I'm in GH, and I'm in BRKR, looking to add some stocks such as CrowdStrike, FTNT, and yeah, some of these on the list. And they all depend pretty much on what the S&P is doing. So if the S&P looks bullish, I'll be getting into some particular US stocks. Now, as far as indexes go, or indices, I still have the Nikkei on the list. So I still have the Nikkei sort of game plan, although I'm waiting for a bullish print on the edge finder. So I checked it this morning and it was a neutral. Let's take a look now. I think the Nikkei continues up. I think this was the pullback. Yeah, neutral at the moment. I would need to see a bullish print to get in, but it's still my favorite index out of all of them. I think it also looks the best alongside the Russell, if I'm not mistaken. Yeah, the Russell is grinding up higher as well. So 2 trades at the moment, and then a Nikkei potential long position. To be honest, I'm waiting for the NFP to pass. So I think the NFP this Friday could be the deciding factor if I get stopped out on my dollar short positions. And we're going to get some thoughts from Kevin tomorrow. So that is definitely going to be more important. After that passes, I can then start structuring some more positions going into the future.
Fair. And you know what? Sluggy brings up a good point as well. But like the data points now are going to be a lot more meaningful and carry a lot more weight, I would say, just because you have essentially no more forward guidance.
Yep. So we got the jolts.
That's what I'm saying. I think we still got 2 minutes left. But maybe Sluggy has the inside information. But Marco, I swear I got the notification on my phone with the release as well. Like 30 minutes ago. I got the notification, but it's no longer there. So I don't know if it got leaked or something.
It did come out.
Yeah, it did. Did it? I swear it did.
Take a look at the calendar.
But when I go to Financial Juice now and I refresh the page, it's not there.
I think it's now orange, if I'm not mistaken, on Forex Factory. So yeah, on Forex Factory, the jolts are due in like 30 seconds. So I'm not exactly sure. What happened here.
And I'm also seeing too now as I'm looking at my screen again. If I scroll down to about 7:35 a.m. my time, there was another. I'll put it up on my screen here. Suspected yen intervention as well. Again.
Let's take a look.
Oops.
I think we pressed it at the same time.
Yeah.
Okay.
So 7:35 a.m. my time, another hint of suspected yen intervention. But let's go ahead and see what jolts do, guys. Coming up here, and we'll see. So to your point, Marco, like if you get a weaker labor market, changes things, right? It's kind of like inverse. If you get a super strong labor market, then the Fed can actually start to hike if they need to, and that's actually bad for stocks. Let's see. Jolts came out better than expected. Was Sluggy right there? No, so I guess the leak that we got was wrong. But you can see here way better than expected there. So we'll go ahead and see what the reaction there is with the dollar and stuff. I don't think much will happen from it, though, to be honest with you. I think the big thing will probably be NFP on Thursday.
Yeah, I think so. I mean, jolts, again, from past experience, jolts haven't been a massive market mover. I think NFP is going to be much more significant. And yeah, it's all about how that NFP prints. And thoughts from Kevin. But I think Kevin is just going to reiterate what he said in the previous meeting, because the CPI is still, we still didn't get the newest CPI. Yeah. So inflation on paper is still highly elevated, even though the Strait is open, even though oil is back to pre-war levels. But yeah, here on the DXY, not a lot of movement at the moment. I think just sort of price action staying the same.
And I wonder why, too, it got downgraded to orange from red.
That is interesting as well. And I mean, maybe it's actually not that important. Like you get a lot of data prints. The market doesn't really look at all of them. You need to be able to filter through the stuff that actually matters and the stuff that's not really important. And specific data points, they are more important in specific periods of time. So I think the ADP NFP was important maybe a couple of years back, but now it's pretty much kind of a non-event. The actual NFP has always been super important. So you need to know exactly what to watch for.
Yeah. Yep. Well, I'm excited, man. I'm excited. And it's coming sooner in the week. It's coming on Thursday. So that's going to be, it's going to be fun. But
at least you don't have to wait until Friday.
Yeah. Yeah. I'll go ahead and pivot out here, man. I'll let you do your portion of the segment here. Join the Telegram channel, join the Discord, use code Marco or Alan on the Edge Finder. If you decide to get it, it is 45% off. So definitely take advantage of the summer sale, guys. Yeah, man. Thank you, Marco, for the lovely conversation. And hopefully we are correct on the dollar softness idea and it works out for both of us.
Yep. Let's see what happens. Thank you as well. And we will see each other tomorrow.
All right, man. Take it easy. Bye-bye.
See you. Goodbye. I do want to mention the sponsor of today's stream, which is Ola Prime. So if any of you viewers want to get funded, do check out Ola Prime. because you can get 35% off with the code A1 Live. So the information is in the description of the live stream. We can take a look at the Trustpilot. So the number of reviews is steadily growing every single day. I see this number increasing. So there's a bunch of users, and this prop firm is massively growing with a score of 4.5. And if you have been in the prop firm space, you would know that this type of a score is pretty hard to get if you are a prop firm. So I think that is pretty nice. What's also nice is that they don't have a consistency rule. So there's no consistency rule with Ola Prime. If you're a swing trader, that is a big, big help. So you can click the link in the chat or click the link in the description of the stream. Use the code A1Live and you can get 35% off. So Sluggy was right on the dot because he mentioned US JOLTS. Let's see. US JOLTS job openings actual 7.618, forecast to 7.29, previous 6.88. So right on the dot. Congrats. I don't know how you got it before the actual release, but maybe there was some sort of a mix-up. Going through the list. So UJ short, waiting for an intervention and paying the swaps. GU in a long, in profit, but we have a red day today. I think with a good jolt sprint. Nikkei on the watch list, hit the 20 MA, but I did not get a bullish print on the edge finder. So I do need to get a bullish bias, and then I would be happy to take a buy position on the Nikkei. S&P, as I mentioned, I believe is pretty bullish. Nasdaq, bullish as well, at least in the short term. You know, yes, struggling in range bound in this sort of period, but if it's above the 20 MA, I consider that as a bullish factor. Russell grinding up higher as well. The DAX is flat. So at the moment, I would definitely not recommend looking at the DAX or looking at the FTSE because they're just not doing anything. So it looks like all of the money is going into the United States and in Japan as well. I do need to mention. So the hottest stock market seems to be US, Japan, and maybe Korea because of artificial intelligence, semiconductors. I think that's the KOSPI. Yep, looks fine. Looks similar to SMH, which is the semiconductor ETF. Yep, definitely looks fine. Gold rejecting this support level, but I did make a video on this, like a short form video. This is now no man's land in my opinion. So we are below the 200 EMA, which means it's tough to go long. The saying is nothing good happens below the 200. And also, if you want to go short, we're sitting at a crucial level of support. We're sitting at 4K, which is a very significant round number. Okay, so this support level right here, pretty crucial level, big round number. Unless we can break that, I'm not looking to go short. If we do break it, and if the edge finder does remain bearish, yeah, I could consider getting short. So gold, very bearish at the moment. So the score is nice, just the technicals are not there for me. So the chart is not there. Bitcoin, very bearish, in a lot of problems. MicroStrategy, MSTR, in a lot of problems as well. So we can take a look at STRC. Yeah, this thing is not doing well either. I'm not going to go into it too much, but the main guy, the guy that's running MicroStrategy, really did. He basically used, I think, ChatGPT to structure some of these preferred stocks for MicroStrategy, and I don't think he even understands what he created. But it's all basically a big kind of leveraged bet on Bitcoin. So anything connected to MicroStrategy is a leveraged bet on Bitcoin. Oil near the pre-war levels, which is good to see. If I'm being honest, I like that. It means the markets have moved away from the Middle East. We can now go back to watching the news, to watching the NFP, and not really paying a lot of... You have to watch what Trump is doing, but not so much anymore, right? So this is a bit, I would say, easier to trade compared to March, April, May, June. Yields turning up today, probably because of the good jolts print. Well, even before that, the 10-year up on the day. What about the long end? So the long end is pretty much, when someone says long end, it pretty much means like the 20-year, the 30-year yield, and the short end would be the 2-year yield. Okay. Max sent me. I guess Max sent the print. Joshua, hello, welcome. Max is the insider. Yes, he has all of the information. Muhammad, hello. So in other words, it's best to rotate your cash into meme coins. Well, I didn't say that. I would say if you hold any meme coins, you're not going to do well in this market environment, because what the S&P is for stocks. So if you're trading stocks, if you're trading individual stocks, you need the S&P to be on an uptrend, right? It's just logical. You need the S&P to be on an uptrend. But if you're trading crypto, you need Bitcoin to be in an uptrend. Otherwise, the whole kind of sector or that whole area is mostly going to go down, is mostly going to sell off. A lot of the shit coins and the altcoins and the Ethereums, they follow Bitcoin. They follow the price of Bitcoin, and then they introduce leverage on that as well. So if Bitcoin drops by 1%, the other coins could drop by 2, 3, 4, 5%. Silver. Let's take a look at silver. 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 So as far as silver goes, this is the same case as with gold. If you want to buy, we are below the 200 EMA, so I would advise not to do that. I mean, not financial advice, but I would definitely not buy at this level. And if you want to sell, well, we're kind of at a support level. I would say this is a better sell compared to gold. But there's a huge correlation. I would say gold is usually the leader and silver is the follower. So if you're looking for a short bet, if you're looking for a bearish bet, you would need to see gold to go down as well, not just silver. So if you're analyzing metals, I would look at gold as well. What about copper? I know copper was on an uptrend, still kind of is on an uptrend. So it's not really correlated with gold at the moment, at least. Platinum, same story as silver. So like silver, platinum, pretty similar. But copper is doing its own thing. First, it's above the 200 EMA. Second, it could be close to breaching the 20 EMA as well. So copper, not that bad. Let's see the print. Bullish print. Okay, it's fine. I mean, it's not for me. I think the chart is too choppy to try and do anything. But if you're looking at the metals market, copper seems like the best bet at the moment. Okay. What else can we see here on the list? Hyperliquid has been on a good run. I think that's the hype coin. Hyperliquid USD. Let's take a look. This does look fine. Yeah. So this kind of deviated from Bitcoin. I mean, it's going up at least. So Hyperliquid, I do like this coin. The problem is I don't have a lot of capital in crypto. I'm not looking to move a lot of capital into crypto. So for me to trade hype coins, it's really not possible at the moment. I would need to move like, I don't know, a couple thousand euros into crypto, which I really don't want to do at the moment. So if you're into crypto, hype seems to be like the best buy. What I do regularly use, especially over the weekend, I use Hyperliquid. I use the exchange to get the weekend pricing. So if you didn't know, if you need the weekend pricing for anything, Hyperliquid is pretty reliable. And over the weekend, just go to this website and take a look. Take a look at the data. Thoughts on NZD-JPY? Thoughts on Aussie-NZD? Got to go. Have a good one, Marco. Thank you, Sluggy. And have a great day as well. I will see you tomorrow. Let's see. Let's do NZD-JPY. And then I'll have to wrap it up because we have the next guest coming on. So NZD-JPY. It's all about the yen here. So the yen has been, as you know, losing strength across the map. If we get an intervention, this is probably going to shoot lower. We are now hitting the 200 EMA. We're also hitting a level of support. So kind of bouncing off of that. Personally, I wouldn't look to take any positions on New Zealand yen. Let's run it through the Edge Finder as well. I wouldn't look for any positions because the intervention risk is so high. We are now in the absolute most dangerous area when it comes to a possible intervention. So above 160, 162, that was the last time we got the massive print lower. So remember this in July 2024. So we hit 161.95, and then we had the massive drop pretty soon after that. We are now above that level. So I think this is very, very crucial, a very crucial level, and the intervention risk is very high. So if you're doing anything with the yen, there's a high chance that the yen explodes in value. That's why I would avoid trading the yen altogether, except selling USD-JPY. That is about it from me. You can catch me tomorrow. It's going to be interesting because we will get the speech from Kevin, and then on Thursday will be the best day of this week, basically, because we will get the NFP print. So thank you very much for watching. Do not go anywhere. Tiger is coming on in 30 seconds. I wish you good luck in the markets. That's it. Goodbye.
If you are a swing trader and you are looking to get funded, then check out today's video sponsor, Ola Prime. Ola Prime has a challenge built deliberately for swing traders. Check this out. The Prime Challenge offers the ideal setup for swing traders with leverage up to 30 times. They also allow news trading. Weekend holding is also allowed. They offer up to 95% in rewards, and they have a 100% challenge fee refund available if you are able to complete the challenge. I know that a lot of people who watch these live streams tend to be more swing trader focused. So when looking for a partner to sponsor today's show, Ola Prime stood out as a perfect candidate. If you'd like to check out Ola Prime for yourself and get a live stream discount, then check this out. Simply use the promo code A1Live, that's A1 Live, for 35% off any of their challenges. As always, make sure to do your own due diligence to see that this is in fact the right firm for you if you are looking to get funded. All the information will be now dropped in the live stream chat or in the description down below. Now back to the stream.
What's going on, everybody? Happy Tuesday. Hope you're doing well. Did want to show you guys, I did finish my UK trade. I did take a profit on my third account, and I wanted to show you what I screwed up the other day. Because if you guys remember, I told you that I was I got a small stop loss on my trade locker accounts, and this is why, ladies and gents. Take a look at my stop losses down here. Do you see what I did wrong? Do you see the difference from the right to the left over here? I had my stop loss misplaced on my trade locker account over here. I had it choked just way too tight, and as you can see, it clipped me out. Over here on GUI Trades, okay, that's the name of the other platform I have. I got my stop loss in the correct spot, and it just barely saved me. Okay. So I felt kind of like a dummy since I got this screwed up. But hey, I thought it was a good teaching point. I know I gave you guys that on Friday. It's just a good idea to triple check, double check, quadruple check, make sure your stop losses are in the right spots. But hey, it's okay. It's not a big deal. It's just not a big deal. If I go over here, you guys see where I got I told you guys I was wanting to take profits just right here at the top of this area after buying this demand. White arrow shows the candle I bought. I tell you guys all the time, when price hits a zone, I want to see either an engulfing candle or a candle with a wick on it or a tail on it. In this case, it was the candle with the tail. Okay. And it touched the 200 EMA just absolutely perfect. And then it closed at the top of the range. I bought the breakout. So that's the only way I use breakouts, guys. Okay. A lot of people use breakouts when they break out of a major, swing high like this right here, like literally what you're getting on breakout traders, only to see this happen all the time. Retrace and stop them out. Well, why was I so conservative on this take profit? Why did I only want to take just that small amount of profit? Well, it's because of what was lurking overhead. What was lurking overhead? And what was lurking overhead was a zone of demand, a zone of supply, rather. Okay. So if I go back to that 1 hour look over here on trading view, you can see the same spot I bought in, and we had this zone up here. Okay. This zone of supply is why I did not want to get greedy, because I did not want any part of this daily supply. And now you see exactly why. Price bounces in, you get your breakout buyers right here. And what happens? What happens all the time? Those breakout buyers get slaughtered, okay, like they're doing now. And it's all because of resting unfilled orders just overhead. So that's why I didn't want to get greedy. That's why I took my profits right there. I didn't want any part of that at all. So hey, but that's fine. That was the trade, and I'm pretty happy with it overall. Just not happy that I misplaced my stop loss on my TraderNick account. But hey, you guys can cut me some slack, right? That's transparency for you. It's good to show the losses. Nick says it all the time. It's great to show the losses because you guys will probably learn a lot more on our losses than you will our wins, at the end of the day. And when you start losing money, you really learn losses. You really learn lessons at that point. Our losses teach us way more than our wins do. Okay. So that's what we really want to focus on. That's why it's okay to take a loss. It's not really a loss. It's a learning. Sometimes you live, sometimes you learn. Sometimes you win, sometimes you learn. Okay. So anyway, back to the chat. Pound Swiss. Let's check that out. Okay. Yeah, we'll check out Pound Swiss. Guys, if you haven't already, do go check out olaprime.com. Nick does have the A1 live code up there for you, as well as the QR code if you're looking to get 35% off of the account of your choice. Definitely go check that out and holler at me as always if you guys have any thoughts or questions on any of those accounts. At Trade Like a Tiger, you can find me on all the socials. Okay, so Pound Swiss, yeah, let's have a look at that. Let's see, Pound Swiss, I do believe is not on the list, but we shall take a look. We shall take a peek. Pretty neutral, but let's go look at the technicals for you. Pound Swiss, where are you at? There you are. All right. As always, guys, you know me, especially if it's something that's neutral. The first thing I want to do is look at the daily. What's the daily picture telling me? Well, looks like we have broken some overhead supply right here in this immediate area. We do have higher highs, higher lows. We do have the 8 EMA above the 21 EMA. So far, I'm liking the bullish look, the bullish picture of it. Okay. And if we flip over here to the left at our 4-hour chart, which is more of my action time frame, you can see right here the same place where price pushed through and closed above the supply. So is there any underlying strength in here? Well, I got to tell you, number one, with Pound Swiss, this is one of those currency pairs. I don't know about you guys, what you think about this. Pound Swiss is one of those currency pairs that just gives you nothing but wicks, guys, just a ton of wicks all over the place. So it's not really my personal favorite chart to trade just because of that. It's not a very clean look. But at the end of the day, do have a zone of demand a little deeper. It's kind of, for me as a supply and demand trader, it's just a little harder to find clean zones is basically what I'm trying to say. It's much different than a pound dollar or a euro dollar. It's just one of those weird ones because of the Swiss franc. So the best thing I can see, right, just from right off the bat, is going to be this daily zone all the way down here at the bottom. So we're still a ways away, 105 half. We'll call it 105.50, which is basically where this smaller time frame confluence is, just hanging out kind of half in and half out of the top of that daily, the proximal line of the daily. That's going to be this zone over here. So that's probably my favorite look. If I look in this little congestion area right here, I can't really utilize this as a daily candle, because if we utilize this green indecision candle, if we use that indecision candle right there for a would-be daily, you can see that when price based, and then we had our leg out, and we went pretty high, but then we retraced all the way and we touched the demand. See that wick right there? So that right there makes this market efficient on a daily time frame. So personally, I've got no interest in utilizing this as a daily demand, and it's all because of that wick. It didn't leave us a gap, did it? Okay. So all I'm saying is I can't utilize my favorite higher time frame for confluence. I would have to look at it on a smaller time frame. Well, let's go down to a 4 hour and see if we got anything else. Okay, we got a little bit of a demand down here. We could take a look at this and I'm going to steal this since I can't utilize it as a daily. This could be a little bit of a 4 hour demand. Broke a minor structure. You kind of based and got lazy for a while, but then you did have a strong push up. This might have been the move right here. And as you can see, it's already kind of touched it. If we look at this last red candle down before the big push up, that might have, and we had a gap and we closed above this, again, former supply. That might have been the move to be had, but as you can see, the move's already pretty well been done. It was kind of lazy at the same time. We peaked in here and it just kind of went sideways. So, and part of that is because overall it's pretty high on the curve. Okay, if we're looking at major swings, major swing points, well, I mean, you got a few possibilities. You could use the most major of the swing lows, which was down here, or even this one, but no matter which one you use, it's still pretty high on the curve. Even this one's kind of in the middle. Even if we take this 4 hour right here, see, that is basically, and I'll just go to a single chart view now. This demand is in the middle, right? Swing low, swing high. This is your top third premium area. This is your middle third where we typically get chopped to pieces. And this is your discount third, which is the bottom third. So that's why I say this demand down here would probably be the best one. But I just don't have the benefit of a daily confluence. Okay. So we could look at that as a 4 hour. And what's 4 divided by 4? That's 1. So do we have a 1 hour candle down here? Do we have a 1 hour demand inside of the 4 hour? And I hate to say, but we don't. Okay. If we're looking at this 4 hour demand, do you see how the wicks are all intertwined and overlapping every other wick, the two candles over? So that's an efficient market on that 1 hour time frame. So for me, just a 4 hour demand is not enough. It's just not enough. Yeah, we have a gap on a 4 hour, but we don't have a gap on a 1 hour or a daily. So for me, that's just completely out. And there's too many candles. So there's to me a lot of red flags for that particular area. And that is using the highest, or I should say a much lower time frame curve in the 4 hour. But when we're talking daily, again, we would probably want to go further down, and that would still be too high. So I don't like it, even if it had a bullish signal. In fact, what are we even getting on pound Swiss? Pound Swiss, pound Swiss, pound Swiss. Where are you at? Pound Swiss, pound Swiss. Come on, let's move. Pound Swiss. Yeah, -1. So see, we're not even getting a good score to begin with. I just think there's a lot of better options out there, especially things like your dollar pairs, because we do still continue to get those really strong bearish looks where the dollar is the quote currency, the euro, the pound, Aussie, Kiwi dollar. Of these 4, I think Kiwi dollar would be my least favorite, just because the Kiwi itself is a pretty decently strong currency if we just isolate its fundamentals. It's exceeding expectations, I think, on 70-something%. Let's go back to the surprise index. And you see, oh, or 50. Okay, 50%. So 50%. So it's a little neutral. Okay. When I have all the dollar pairs on the bullish or bearish list, well, I kind of default to the surprise index so I can see which opposite currency is the weakest. So we already know the dollar and the yen are at the top. Well, the euro is the weakest. This is just the fundamental level. But I would personally pick the euro dollar, Aussie dollar, or even the pound dollar, which I'm already in. I'm still in that pound dollar, that very tiny trade I told you guys about from the other day. But I would prefer to look at euro or Aussie dollar. So let's go have a look at those for you guys real quick. Euro dollar. So euro dollar is, let me go back down to a 4-hour. Yeah, so we kind of fought this 30-minute zone, guys. This was a 30-minute zone. I didn't draw this until this morning because somebody, well, I just happened to go digging down deeper. I don't dig down to the smaller time frames unless I just don't have anything on the higher time frames. But I went ahead and did it anyway because I did see where we were getting a little bit of rejection right here. This point here, this point here. So I thought, well, why is that? So let's go down. And when we go down to a 30-minute, you can see we're getting a little bit of a zone structure here. Red candle in the basing candle, yellow candle on the leg out with that continuation to the downside. So smaller time frame, volume looks great, but it's also the same spot where the Asian session just died off and went sideways. And not to mention the latter part of the Monday's New York session after the lunchtime doldrums. Okay. So I just didn't like that at all. And that's why I had no interest. But nevertheless, still getting a little bit of a bounce, are we not? I just don't feel like it's enough to completely push price back to the downside. So for me, I'm keeping an eye on this 4-hour zone right here as one possibility. This one right here would be probably my least favorite because there's not a whole lot of volume on this leg out candle down here. Talking about this one here, that green candle. Yuck. Okay. If we can chew through that, then the next stop is really this higher confluence up. But it's also the most bearish asset. So do you think we even have a chance in hell that price bounces that far up? I don't know. So that's why I'm keeping my my main interest right here at the 114.5, 114.50 area for this supply right here. At least we had a yellow candle on the leg out. Could have been bigger, but it was yellow nevertheless, meaning it was at least twice the size of the average of the candles prior. So a spike in the volume, a spike in the trading activity, a spike in the tick volume. Okay. So that's why I'm keeping an eye on this one here, 4 euro dollar. Red projection arrow says it all. Okay. Just take price down to the swing low if we happen to get a bounce up in there. So that's euro dollar. I'll do Aussie dollar. I'll hop over here and see what you guys are chatting. Yeah, Aussie dollar. So we're still okay. So there's a little bit of a change since yesterday with Aussie dollar, and that is the fact that we chewed through and closed below the daily demand. Okay, so that tells me we've got some underlying strength somewhere in this impulse move. Impulse move, swing high. It's a current swing low. That's obviously a bearish impulse move. So where is the underlying strength? Banks typically attack the inefficient market as close to the swing low, swing high as possible. And I think that's going to be clear up here for Aussie dollar. So nothing's changed on that, 70-60. But the big change is the fact that we finally broke the daily. Now, extra bonus points if it can break through the weekly. Okay. But just seeing that it broke the daily, that's enough for me to start getting interested in this zone I drew up last week. So that's Aussie dollar, euro dollar. Those are my two favorite short opportunities. Let me see what you guys are rapping about over here. Ascending pound Swiss. Oh yeah, back to the pound Swiss again. 107 to 108. Yeah, I mean, just to kind of put a bow on the pound Swiss. I mean, if we can break, what'd you say? 107, 108. Yeah, I mean, if we can just start breaking structure to the top side and give us a decent leg out, because so far we haven't had any bullish, we haven't had any gaps. We had that 4-hour gap I mentioned, but we didn't have a daily or a 1 hour around it. For me, guys, as always, I want to see two sets of eyeballs on a zone, meaning I want to see two gaps just to get that extra confirmation. So, you know, if we can break all this and get a decent leg out, then maybe we can find something. But as of now, we're not really getting a whole lot of separation between candles. So that's why I personally don't like pound Swiss at all. At all. Hopefully that helps you though. Okay. Obviously do what you want to do, but just in my knowledge with, 12 and a half years of zones, I just don't like it at all. Let's see here, guys. Gold, silver. I don't think we talked gold, silver yet. Just from a supply and demand view. Where's my gold and silver at? There it is. Let's see here. Yeah. So, okay. So yeah, I kind of briefed you yesterday. The question was, are we going to repeat what happened to me up here, right? Where I've got the daily 4-hour confluence right here. All it took was the 4-hour zone to actually push price down. We have another daily 4-hour confluence followed by another zone a little deeper down, 4-hour by itself. So the question I posed was, is going to happen to me again where this 4-hour zone pushes price and I get skipped on this this other daily 4-hour zone. So for a while it looked like it, but as you can see, it's kind of retracing itself. So I'm going to stand by what I mentioned yesterday. If we can get just a little bit more of a push up to that 41.69 area, then I might be interested in possibly shorting up in this area, especially if we can touch that white line, because that's my 1-hour confluence. That would be daily 4-hour, 1 hour. That's what I want to see, guys. So that's going to be my plan for the gold. Obviously, we've seen the dollar is as strong as ever. That by default picks on gold. Gold's getting all kinds of red boxes, except for, I think, was it the seasonality? Gold. Yeah, seasonality. That's it. Now, tomorrow is a brand new month. Okay, this is seasonality for the month of June, but tomorrow is July. So we'll get some new readings. I don't even know what the July seasonality is. Perhaps we could take a quick look at that, actually. Seasonality. I don't know if it'll show or not. Let's see here, guys. Seasonality. Seasonality scanners, monthly scanners. This is something I haven't really looked at a ton. I should probably get on top of this a little better. But let's go see what gold shows for July. Okay, so for July, is that, yeah, 1.20%. So bullish on average. Now, just because it's on average bullish doesn't mean it's going to go bullish. I don't want to fight what the seasonality thinks when I see all the data going just straight down. Okay, if we go back to the asset scorecard over here, take a look at gold. And you guys have priced, I know Nick mentioned it, and I know Nick showed it. It's a -12. I mean, this is just about as ugly as it gets. Seasonality. Okay, the COT was bullish. That's another blemish, lone blemish. But the latest buys and sells was bearish, but the overall net positioning is bullish. So that is kind of a look at your gold, and this is why it's such a strong bearish look right now. And dollar is such a strong bullish look because of all the data that the dollar is exceeding. Today we did have the JOLTS numbers come in. I got to refresh that. So it came in bullish. So nothing changed. Nothing changed as far as the 100% mark on the dollar because the JOLTS number was bullish yet again. Okay. 7.59 million. The cheeseburger consumer confidence report. That's what I call it. Got to be colorful. Okay. That's more of a medium impact event as well. It missed. But other than that, JOLTS was good. Take a look at the JOLTS. Let's see here. Let's get this back to this screen over here. And there you go. So it's already updated. So continuing to stay at 100%. Everything else has been looking pretty darn good lately, guys. If we could ever get a neutral report on this PPI, we'd actually have those boxes neutral, and then we'd have 100% on the dollar and stocks. I don't think that's something I've seen. I know it's something I've never seen because I think this is my first time personally seeing the dollar at 100%. So looking pretty good, guys. The data, the hard data, the why, the reason we get into trades, everything's looking pretty good for the dollar and stocks. But obviously stocks have the sector rotation going on right now at the with the AI and all that stuff. So that's money. That's why the dollar is kind of gaining. That's why the dollar continues to fly upwards. So anyway, dollar yen, Marco perfectly mentioned that earlier. We're obviously partying like it's 1986, as you can tell. Anything above the white line there. And I told you guys that if we get a break, retest, might possibly have some interest. Well, I think I might have identified a little bit of a 2-hour demand right here. Now, I feel like this is probably risky. I feel like it's probably pretty high on the curve. But there's no denying that we've got a little bit of demand here. We've got a gap. And if you ignore the wicks for just a second on this thing, if you ignore the wicks and just look at the bodies of these candles, the real bodies, what do they keep doing? They keep breaking and closing higher and higher and higher. So that to me looks like, despite the wicks, that to me looks like a pretty good overall momentum to the upside. After we've broken and closed above into 1986, okay? So that's something I'm looking at pretty closely right here is how these candle bodies keep closing, how they keep opening and how they keep closing higher up and higher up. Okay. The wicks can get noisy. You guys agree. But at the end of the day, the bodies is where the bulk of that activity typically takes place as far as your volume, your trading activity. So I do want to see if we do get a little bit of a push down. I might take a stab right here at the 1986 level. But it would not be anything, guys, that I would want to take any higher up, just like I did with the FTSE trade, any higher than the swing high. Because who knows what the hell the Bank of Japan is going to do if we start continuing to invade and get further back in 1986, 1985 levels weren't that far away from it. I don't know. Are they cooking up a gigantic intervention here? I mean, like all these pesky little tiny ones have done nothing. In fact, we had another one earlier today, I think. Okay. Did we have another one earlier? The leg down didn't really seem like the volume was that incredible, but the other leg did, the leg right after, and it just retraced all of it yet again. So if this was a suspected intervention, just like all the ones previous, it's done nothing to keep price down. The data is so strong. The yen is so strong. In fact, the Bank of Japan's probably just, I don't know, I think they're pissing their pants because they have such a strong currency, but they can't fight the 100% the dollar has as well. So it's very entertaining stuff, I think, when it comes to the dollar yen and the intervention and fighting a strong dollar and obviously the sector rotation from stocks, more money going into the dollar. Bank of Japan's just like, do we give up? Somebody commented that earlier when Nick was talking. Did they give up? Did the Bank of Japan give up? It's kind of funny. I don't know. But at the end of the day, guys, I'm not Nostradamus. I have no idea what they're going to do. Nobody does. So the only thing we can do is just, keep our stops tight on trades like this and not try to get too stingy and try taking price clear the heck all the way up here. Just take what the market might give us. And if we have a basing structure and we've got momentum candles continue to go higher and higher, it gives us a pretty decent swing high right there. Hey, do what you want, but I can tell you, I'm going to probably try to take a few pips out of that. That would be no more than about 40, 45 pips if price just reversed right now. Okay. So that's what I'm looking at for dollar yen. And see what you guys got up here. Anything? Sending. Ported to 108. Okay. Got just a few minutes left. Yeah. When it comes to oil, pretty much the same thing. It's just they both, for me, have to start making a new series of higher. They are giving us some nice bullish signals on the edge finder, bullish bias. But right here's Bitcoin. I got to start seeing a series of higher highs, higher lows. But all we've got is downtrend right now. New lows being broken, and we broke the rest of the daily back back here actually last week. That's Bitcoin, and then same thing with oil. Okay, oil, we are getting close to that daily demand I called out some time back, which is obviously the pre-war level. We got to the gap and we're just kind of dancing sideways. So need to see it drop. I need to see at least a small series of higher highs and higher lows for me to have any interest in trying to get long on this based off of demand. What else we got over here? Got a few minutes left, guys. The Dow, oops, wrong the Dow is probably still my favorite. In fact, I was just looking at the the put to call ratio earlier, and I noticed the Dow, I think, is the only index. Yeah, S&P is still kind of in that neutral range. The Dow is, or maybe it's the Nasdaq. Dow's not. Actually, it's neutral as well. Oh, never mind. I guess they changed. Maybe that was yesterday I saw these. Yeah, I was going to say, I thought the put to call ratio was giving us a high put volume on one of these, but I guess it's not. So we'll scratch that idea. Gold is, and Nick pointed this out this morning, guys, gold is giving us a high call volume for the asset. So this starts to make it even more attractive to find some shorts, because you got the dumb money, okay? The dumb money on the other side of this. They're going long. So what does that mean about their stop losses? It means their stop losses are going to be vulnerable to the banks. Okay, they're trying to buy. Well, it's clear as day. Everybody knows where their stop losses are. If they're trying to buy all through here, probably putting them down here, some stops here, and obviously the stops below. So really looking forward to a bullish pullback for this possible short on gold, because now we know where the retail stop losses are. There's going to be some here, and like I said, some under here. So that would be another case very similar to what I just showed you on dollar yen, where I personally would just take it down, take a short down to the swing low. Because once price bounces into the liquidity, okay, perhaps, we never know. Maybe the banks might want to temporarily take it the other way. I don't want to be around to find out. So I just want to take a small handful of pips, get the heck up out of there. Ladies and gents, gosh, time is over with already. Yeah, I think that's about all I got, guys. I'm going to continue to monitor the pound dollar and see if I can't squeeze into something new to show you guys tomorrow. So, but if I don't find anything, I'm going to sit on my hands, guys. It's got to pull me out of retirement for me to jump into a trade. It's got to pass all my rules, just like that UK trade did. It passed every one of my rules, and then I screwed up on the stop loss on half the trade. So anyway, stay safe out there, ladies and gents. We'll be back tomorrow for another fun day. Take care. Talk to you tomorrow.
Have you ever wondered how you could find more trades like this gold runner, or the S&P 500 breaking out to all-time highs, or this sell-off in dollar Swiss franc, which was a clean short opportunity? Well, all of these charts shared one major thing in common. They all had powerful macro fundamental catalysts driving price decisively in one direction, presenting a really strong trading opportunity. Hi, my name is Nick. I'm a 10-year trading veteran and the founder of A1 Trading, where we build market scanning software that help traders to track macro fundamentals, crowd sentiment, and the commitment of traders' data to best understand where institutions are moving their money. Our tools automate everything from studying jobs market data, inflation statistics, and economic growth metrics, bringing it all together into a scorecard or rubric that helps to spot better potential trading opportunities through our insights offered by the tools. So if you're looking to access our tools, stream viewers get extra discounts, and we're currently offering payment plans as an option for those who would like to split up the cost of our tools into a couple monthly payments. Alternatively, we also offer a free Edge Finder tutorial course, as well as fundamental macro course that can help you to learn the concepts behind the tools. Scan this QR code that you see on the screen right now to be connected with a real person from our support team. We have helped thousands of traders level up their trading through insights, dashboards, and automation. And we are passionate about this subject because having the right tools that hedge funds and proprietary firms keep locked in key is a powerful game changer for the average everyday retail trader. To explore our products, payment plans, and just to find out more and speak to a real person about this, scan the QR code that you see on your screen right now. Alternatively, the link can be found in the live stream chat or in the description of the live stream. On our website, you can find a collection of both free and premium trading tools that our team has put together to help traders take their trading to the next level. Well, you might be wondering, how can your tools help me? Well, whether you're a swing trader or a day trader, our tools are meant to help traders traders of all different levels of skill, time frame, and traders that trade Forex, commodities, indices, stocks, etc. At the core of it is automation, simplicity, and bringing it all into a one-stop shop for you to scan markets more efficiently and build a curated watch list of potential trade ideas. So regardless of what you trade, we hope that our website helps you in some way. And if you have any questions, feel free to contact us using the contact button in the top right or the live chat feature available on our website. We also offer free courses on fundamental and technical analysis on our website, as well as a range of free tools like, for example, our risk calculators that can help traders to level up their trading without paying a dime. Our goal is that our tools and site help you in some small way, and we wish you the very best in your trading journey. Thanks for listening.